We're going to talk through a brief introduction of Coro for those of you who don't know who we are. So first and foremost, we have our disclaimer here. So those of you who've got access to the presentation, please take your time just to understand the context in which this presentation is giving you tonight. Then we'll touch through the Young PSC, those who do know who we are will know that we're actively drilling at the moment there. And then we'll touch on the Bulu PSC and Block 2A, which we have in Malaysia, before wrapping up with a bit of an overview of Southeast Asia and the current E&P landscape. So first and foremost, for those of you who don't know us, Coro is an upstream oil and gas exploration and production company focused on growing in Southeast Asia. The company admitted to trading in April of last year on the consolidation of two small Italian portfolios, as well as the introduction of £14 million of new equity at spot price, alongside which we introduced Lombard Odier Asset Management as a shareholder who took 16% of our business at that stage, and CIP Merchant Capital who took a 20% stake in our business. Since then, the share register has turned over. Lombard Odier today now own just shy of 25% of our equity, and CIP Merchant Capital remain with their original position of 21%. Conrad Petroleum, who's the operator on the Young PSC, owns 7% of our equity. Directors own just circa shy of 2% of the equity, and the balance is held with retail investors. In March of this year, we raised 22.5 million euros by way of we issued a 22.5 million euro bond. Half of that euro bond was subscribed for by Lombard Odier. A quarter of it was subscribed for by CIP, so continuing to support the company, and other institutional investors took the balance. That financing was to allow us to acquire and fund the Young PSC. Our CEO is James Menzies. Those of you who are long in the tooth in oil and gas investing here in London will remember that name. He was the CEO of Salamander Energy, which was a main market listed E&P company focused on Southeast Asia. That's a company he co-founded around his kitchen table back in 2004, grew to a company of producing 20,000 barrels of oil a day before it was acquired by Coro Energy in a deal of 850 million enterprise value at the back end of 2014, beginning of 2015, as the oil price was coming off. James is a geologist by background, and a very tenacious business development man, I must say. So he knows the patch like the back of his hand and has been instrumental in us getting the traction that we found within our first 18 months of admitting to trading. So as a company, we released our interims last month. You would have seen there's 11.5 million cash in the bank as of June. Net debt circa 7 million, and today we currently have a market cap of 20 million. We are a tenacious company. We've done 3 transactions in our first 18 months. We've massively transformed the balance sheet of the vehicle that we're in charge of. And that's a very important point I would like you to note, is that we are a business development company as well as an E&P. So we've had 3 transactions that we've done to date. We'd like to see another 3 in the next 18 to 24 months as well. And then we would have hopefully a broad portfolio of production and development as well as exploration for a blended mix. So first and foremost, let's go on to the Young PSC in Indonesia. So this is a transaction we announced in Q1 of this year. We acquired a 15% interest in the Young PSC, which is in the West Natuna Basin, offshore Malaysia, but in Indonesian territorial waters. Now, the West Natuna Basin has been a strong producer for Indonesia and indeed supplying to Singapore. So there is a very strong infrastructure in place. The basin's been producing for 20 years now, so that infrastructure the basin is now in decline, so there's ullage within that pipeline infrastructure that will be valuable for us to market and commercialise this gas. So we're 440 kilometres away from Singapore, where we have an MOU signed with a gas buyer. We have a plan of development which is approved by the Indonesian authorities. And most recently, we have drilled an appraisal well in the Mako gas field, and we're currently drilling an appraisal and exploration well, which we'll touch on as well. Now, the field itself is quite a large aerial extent. It covers approximately 350 kilometres square, but it's shallow gas. It's circa 400 metres below the mud line. We've had 4 wells that have penetrated the field to date, and they've all found gas. And obviously, we're putting another 2, or we're 5 now, and hopefully 6 by the end of the month. Now, the reservoir has been cored and tested, and most importantly, flowed commercially at 10.8 million scuffs a day. So we have a resource here of 276 BCF on the 2C case, which is what we acquired as part of the transaction, and we've identified that as a commercial resource in itself. We drilled the Tambak 2 appraisal well in the last couple of weeks, which was a 13.5 kilometre step out from the original gas discovery, which was the Mako South 1 well. So that's a huge, large step out, and we had a successful appraisal with finding gas. The key risks of that drill was the quality of the reservoir, which we have obviously de-risked with finding 33-foot sandstone there as opposed to the 24-foot that we had at the Mako South well from 2017. The issue that we came across was, unfortunately, we failed with the DST, the drill stem test. That was unfortunate because it was a nice to have, but it was unfortunate because the market lives and dies by it. So the key risk of the original Tambak 2 well was the quality of the reservoir, which is why the DST was in our work program. But actually the results of that were that the reservoir there is better than the Mako South 1 well. We did an open hole test, and the consequence of that was we had a faulty packer. So we had an operational issue here, not an issue with the rocks. So when they pulled out, they swabbed the well, and we ended up flowing gas uncontrolled. So when that happens, you're 400 kilometers offshore, you have to control that well. And it's 60 barrels of kiln ended up going down there, which ultimately ended up plugging and abandoning the well. Now this well was never intended to be a producer, so it was always going to be plugged and abandoned. But the consequence of that is we didn't get the DST result that was originally in the program. It was originally in the program, as I say, because the quality of the reservoir was the main risk on this particular well. But we proved that the reservoir had better quality than anticipated, and we achieved all the other objectives. And the DST became nice to have because we already have that data from the original Mako South 1 well. So moving on, we're now currently drilling the Tambak 1 well. Sorry, the naming convention's reversed here. So we're drilling Tambak 1 now. Tambak 1 is a 4.5 kilometre step out from the original Mako South 1 well to the northeast. And the principal objectives of this are twofold. One, we want to appraise the Mako gas field, and ideally we want to see the gas-water contact there, and we want to see gas on water to appraise the limits of the field. But then we'll be deepening that well, and we'll be testing a 250 BCF mid-case prospect that we have a 45% chance of technical success. With regards to the appraisal of the field, that is happening now. So we're drilling it currently at the moment, and we hope to be able to update the market at some stage, maybe towards the back end of this week, with regards to what we're seeing there. The intent of this is to increase the resource size that we have in the Mako field. So internal estimates or management estimates believe that we can convert 100 BCF of 3C resource into the 2C case here. Now we've appraised this field, and our analysis is that this is commercial at 276 BCF resource. But if we can convert that 3C number to 2C and some 2C to 1C on the back of the 13.5 kilometre step out and a 4.5 kilometre step out, then we're flowing extra gas through a model that we've already appraised as commercial, and that we can achieve all of that production from the same POD which has already been approved by the Indonesian authorities. So that really is extra cream for us to be able to monetize. Now we will deepen the well, and we will be testing this 250 BCF prospect, which is in the Lower Gabus. Now this is the main area in which people are exploring in this basin. There have been drills either side of this well, here and here, which did come in dry. Now what you will also see is that on that we have a seismic response within this structure here, which didn't exist in the other two, which has led us to the 45% chance of technical success. Now, what I must stress to you all is that this is, again, a very nice to have opportunity for us. This is relatively low risk exploration, but the incremental cost of us to test this prospect is only the marginal extra couple of 100 meters beneath the main horizon of the Mako field, which we want to appraise anyway. If this was to come in, we have the opportunity of converting a resource size into something near a 600 BCF, which is very strong currency for us in terms of the negotiations with Singapore buyers. Singapore imports all of its gas, and a consequence of that is they want surety of supply. So bizarrely, they will pay a premium price for a bigger resource than if you have a smaller quantity to sell into their market. So this is very valuable for us in terms of those negotiations, which will be continuing following the results of the current drilling campaign. However, if this doesn't come in, what we still do have is a field by which at least there's 276 BCF, and as a consequence of the Tambak 2 well we've drilled, we expect to be near 370 BCF on the CPR upgrade. So this wouldn't be an asset killer if the exploration didn't come in. It very much is a nice to have. We would obviously like it to be successful, but the monetary value of this gas is slightly less valuable to us than the increase in the resource size in the Mako field, because extra infrastructure would need to be put in place in order to monetize the gas that we find there. But overall, we have a field here which is commercial. We have appraised 13.5 kilometre step out, which will be significant impact for our CPR. And most importantly, we are adjacent to the West Natuna transportation system, which is the big gas pipeline infrastructure that goes from this basin all the way through Indonesia and supplies gas to Singapore en route as well. As I say, we have a HOA signed with Sembcorp, who's a gas buyer in Singapore, and that's a premium market, $8 to $11 per MMBTU gas price. So very lucrative market. And for the development costs of this project, a gas sales agreement signed with a Singapore buyer is credentialized with the bank, so very bankable in terms of getting the development funding that we need. So we're currently drilling at the moment. We are expecting results in terms of the appraisal of the Mako imminently, and then there will be a deepening of that well to test that Tambak prospect, and perhaps maybe that will be some news flow that we might be able to produce for the market at some stage next week. So it's all going on at the moment in Indonesia for us on the Young PSC. And the CPR upgrade we'd hope to be able to deliver to you early in the next year, early in the new year. The first transaction that we did in Indonesia was acquire a 42.5% interest in the Bulu PSC, which is in East Java. This contains the Lengo gas field, which is 359 BCF of 2C recoverable resource. The gas accumulation lights up on seismic, as you can see in the top right of the slide here. We have a well-developed reservoir over 80-metre column height, and we've successfully appraised and flow tested and cored it. So the two wells that have gone into this gas accumulation flow tested at 12.9 and 21 million scuffs per day, respectively. So very commercial flow rates. We have an approved plan of development again here with the Indonesian government, Indonesian authorities. And the current activity that that's happening on this license is gas marketing. So there's multiple buyers for gas in East Java. It's a very industrial area. There are negotiations that are steered by the Indonesian authorities that are going on now. There's always a conversation to be had with regards to price. But the main issues for us here is actually identifying the right buyer and working with the government, because there are such a number of different requirements for this gas. So expect to see here, perhaps maybe get the first gas sales agreement signed by hopefully the end of the calendar year. If not, we would expect some stage in Q1. And from there on in, we can take FID on the project and then move it forward towards commercialization and start flowing gas, hopefully by the back end of 2021. As we spoke about, we've got a shallow carbonate reservoir here, so it really does light up on seismic, so it's very well defined. The gas itself is 67% methane, so it does have 12% CO2. What that will mean is that we will be required to build a carbon steel line pipe to bring the gas back on shore, which is 64 kilometres. We will remove the CO2, and then we'll be able to sell the gas to the gas buyers that we are communicating with at the moment. So, a relatively simple project here insofar as we have a gas resource, we have a multiple number of gas buyers. There needs to be the gas sales agreement negotiations. Once that's delineated, and they're fixed price gas contract, so we wouldn't be subject to any market volatility in the commodity prices. We can then move to FID, develop this, which will be gross project of 200 to 250 million. And then this asset is expected to be producing for the next 10, 11 years with relative low maintenance. but high impact for us in terms of the resource that we've acquired and the price that we paid. One of the key areas that we're looking to build our business in is Malaysia. And Malaysia has a host of opportunities for a small cap E&P like us. To date, we have announced a joint study with Petronas on Block 2A, which is very much off strategy for us, I must say. Our strategy, as we spoke about at the beginning, is looking at development opportunities and production opportunities with discovered resource. Here we have a big E exploration prospect in deeper water offshore Sarawak. However, what we have with Petronas is nearly 300,000 square kilometres of 3D seismic of 2016 vintage, so very high quality that was never interpreted. We've worked and we've interpreted this data and we've seen some prolific opportunities within it. We're currently negotiating with Petronas to convert this into a PSC, so that should hopefully be news flow that we'll be looking to bring to the market as well. And in terms of the commercialisation of this project, this is deeper water, bigger expense, and it's not something we would advocate using Coro's balance sheet to fund. So I would expect to see us take on this PSC, work it up technically, but bring in a farming partner, and already preliminary conversations are going on in relation to such. The opportunity of commercialising this is that the Bintulu LNG plant is onshore just here. This is the world's second largest LNG plant, and if you've been reading the news in Malaysia over the last couple of months, you would probably have seen that it's facing a supply shortfall. So there is a requirement for big gas to come in there and supply the second largest LNG plant in the world, so there is a commercial market for us to address as well. What we're showing you here is some of the prospects and the surrounding leads. I think what we can take away from this is that we do have some giant structures there, and we are in an area where multi-TCF discoveries are being made. I say are being made because there was a 2 to 3 TCF discovery made back in June in not too distant territory to where we are. So it is a basin that's in play. We do know there is multi-TCF opportunities there. And the data that we've seen so far is very encouraging for us to take something on that is is off strategy for us, but still we think there's a material opportunity for Coro to play a significant part in moving this asset forward. So in conclusion, what we have in Malaysia is potentially one of Malaysia's largest undrilled structures. That's what we've identified. Gas in place is multi-TCF on our analysis. There is a commercial opportunity there to supply the LNG plant. The obstacle that we face here is that for us, the cost of this well would be beyond our current capacity, and so therefore, in order to be able to advance this, I think we would be needing to bring in a partner, or otherwise have an extremely bullish oil and gas market, which we haven't seen in a short while. So moving forward, let's talk a little bit more about Malaysia and generally the area in which we're trying to grow. A lot of M&A activity. So Repsol and Petronas, a lot of M&A activity. We saw Medco acquire Coro Energy at the beginning of the year. Last year we saw Coro itself acquire the Santos package. OMV are coming into Malaysia as well. And we're seeing a rotation of the majors out of Malaysia, which will present opportunity for new independents like ourselves to pick up their asset bases and establish a platform for us to grow from. As we spoke about, Repsol and Petronas had a 2 TCF discovery onshore Sumatra, Indonesia. We also mentioned about the Sarawak discovery, 2 to 3 TCF made by KUFPEC, PTTEP and Petronas. And Eni also had a discovery offshore Vietnam. So there's big discoveries still being made here, despite us being operating in mature basins. And the opportunity set for us to capture some of that is opening up. In Malaysia, we are seeing the majors rotate out. We're seeing some of the smaller independents and medium-sized companies replenish that pipeline. This is going to present opportunities for independents like ourselves. And what I really like just to finish up on is this slide, which we've taken from Petronas. So this shows that there's 173 fields with discovered resource and open acreage in Malaysia. Now that, for a small E&P like ourselves, presents a huge opportunity set because these are overlooked fallow discoveries. The barriers to entry in Malaysia are high, so they have a test in terms of your operational capability and your financial scale. We set aside both They've also just announced the new bidding round, so that's been announced now. So there's discovered resource in there, which is ideal for us. There's exploration, and there's some work over production. So that's news flow that that's an opportunity for us to be participating in as well, and hopefully something that we can update the market on in the first half of next year as with regards to our success. So in summary, we're a small cap E&P. We have grown in Southeast Asia. We will be divesting of our Italian portfolio. That's held as a discontinued operation, having served its purpose. We've secured institutional funding from 2 current cornerstone investors who follow their money with the second funding round that we've done. And we are continuing to uncover opportunities within Southeast Asia. I'd like to see a bit of production in the portfolio. And in terms of current news flow, we've got current drilling activity. So news flow in terms of the Maker appraisal is due imminently. Some stage, hopefully by next week, we'll have a confirmation in terms of the Tambak prospect and what we've found or what we discovered or not there. In terms of Bulu gas sales agreement, hopefully by the end of the calendar year, if not at some stage in Q1, and then moving to FID. And in Malaysia, you should see us hopefully convert the joint study into a PSC, participation in the discovered resource round, as well as the general BD activity that we've currently we have continually ongoing at a whole as well. So quite a lot of news flow hopefully to come in terms of operations and also in terms of new opportunity as well.
Thank you very much, Andrew Dennan of Coro. So who's got a question for Andrew? Did I see one? Yes, one at the back there, and then one in front.
CO2 removal, would you also need to remove the nitrogen to meet the biospec?
No, nitrogen lowers the calorific value of the gas, but it's not required in terms for the spec to sell into the current buyers that we're speaking to.
Thank you.
And there's one just in front of there.
Thank you. Just a very brief question. In terms of BCF capacity, what sort of estimate would you say you have going forward? You know, within the whole geometry, say 5-10 years.
5-10 years. So from our perspective, we believe we're already a mid-cap in the making. On the commercialization of these 2 assets in Indonesia, we're envisaging a production plateau of 7,000 barrel BOE equivalent. So we think we're already well positioned to get to where we're going. Our aspiration is to grow the business quite similar to what James did at Salamander, towards 15,000 to 20,000 barrels of oil a day production. And at that stage, you should be throwing off quite healthy free cash flows. And you become very interesting then to potential acquirers. And we've seen in this area, there's a lot of M&A activity that people are acquiring it. And as we spoke of Afia, for example, acquiring Santos and then being acquired themselves by Medco. It's a path that's well trodden. So our aspirations in 5 to 10 years is to be sold to another company. But before that, we would hope to continue to increase our resource base, bring production online and grow a business that would be targeting 20,000 barrels BOE equivalent production per day.
Okay. Yes, one at the front here.
Thank you. Andy, taking into account the market's response to Tambak 2.
Sorry, can you just speak into
Sorry,
the mic?
taking into account the response to Tambak 2 by the markets, how are you going to deal with Tambak 1? Because I think that's a barrier. Because they're expecting results and all that. And for me, I feel confident it'll be good, taking it to whatever.
I think the market's cynical and probably rightly so in many regards. In terms of how it received the news flow of the first drill, I think we've been over-punished. What we proved is that the rocks are of good quality and the investment value should be enhanced. We didn't get the DST, and that's probably the cynical part of the market, saying you didn't get the DST, well, that's what we wanted. We didn't need it. It was a nice to have. It was in the program because the key risk was the quality of the reservoir. But when you're offshore, you execute your program as it was designed. So that's what we did. We had an operational issue. These things happen in life, and it's unfortunate. But we have been overly punished because what we have done is increase the resource, or believe we've strongly increased the resource size by having a successful appraisal 13.5 kilometres away from where the original discovery was made.
What would you say you've learned from that operational issue then, the whole mud capping situation?
I mean, there's not a great deal we can do. These things do happen, unfortunately, out, and it's a fact of life. You have to live with it.
And is that a risk when you go back to that area?
We don't believe so, no. We think it's an isolated incident. The well we drilled successfully. The packer was the issue, and then we ended up swabbing the well and flowed gas uncontrollably and had to put 60 barrels of kill mud down there. So, you know, it's very unfortunate. The thing that I would say is that on our initial analysis of everything that we did succeed in, we were expecting the flow rate to be at least equal, if not better, than the Mako South. So that hurts us doubly, because not only did we bring bad news, but we should have been bringing you really good news as well. So we can only just continue to get out there and educate people as to what we're doing and why we're doing it. But words like plugged and abandoned form an impression, despite the fact that it was always going to be plugged and abandoned. And language of that the market reads infers something that maybe isn't there. So, yeah, it's our job to educate.
Taking into account that Tambak 1 is next, and we should be hearing some news very soon about that. Will that include a DST also, or?
So we have the equipment on board for that. Now, the barrier that we're going to brush up against is the weather window. Okay. So we're getting towards monsoon season, mid to back end of the month. So it'll be, again, a nice to have. Yeah. But let's see where we are in terms of drilling the Tambak prospect itself and the time that we have with that weather window.
Timelines between finishing Tambak 1 and the next thing you have the Bulu, right? Yep. What is the sort of, I'll call it dead time in between as an investor?
It's all live ongoing now, right? So we would hope perhaps maybe to bring you a first gas sales agreement on Bulu by the end of the calendar year. Drilling is currently ongoing. Perhaps maybe that'll be finished by the end of November. So there's drilling activity through November. There still is the opportunity of a gas sales agreement by the end of the year. If not, it might slip into Q1. There's BD activity that's ongoing at any moment. And yeah, that could crystallise at any point in time. And then in terms of Block 2A, which we're working on with Petronas, that could be converted into a PSC as well. And on that event, we'll be very much more vocal with regards to what we've seen in the data that we're able to show people. And that would testify towards that summary chart that I showed you in the presentation about potentially largest undrilled structure in Malaysia and multi-TCF gas in place.
So I can start my holidays in Bali very soon.
Yeah, I encourage you to go Bali at any time.
Thank you.
Thank you very much indeed from Coro.